Welcome back, folks. Another episode of Come Learn with Me with Greg Silverman from the Eiffel Tower, the beautiful Eiffel Tower. So this one comes from the Harvard Magazine. It's an article you all shared, liked amongst the top, three or four from last week. So let's see. Harvard's endowment outlook updated. All right. We're going institutional investing here from the Harvard Magazine. So this is all right. It's very recent. As an early indication of just how far might be up for investment returns in the fiscal year June 30th, which is the year of endowments, the year end for endowments, the consistently excellent University of Virginia investment management company, UVIMCO, 20-year annualized rate of return of 10.6% reported a 49% return for its long-term pool, in which its endowment is invested. Wow, that's stellar. Wow, that's crazy, because these are not small pools of capital. All right. Although UVIMCO manages a much smaller pool of assets in Harvard Management Company, which oversees the university's $41.9 billion endowment, as of June 30th, 2020, and other investments. We just got to highlight this for the record, isn't it? Unbelievable. So much money. It pursues a highly diversified strategy like that used at HMC and peer higher education endowments. Accordingly, UVIMCO's results by asset class are of interest. Public equity, so just remember, this is through to 30th of June 2021. Public equities, 29.9% of assets, produced a one-year return of 51.4%. Wow. Private equity, 26.4%, yielded 98.7%, apparently driven by venture capital and similar holdings. The report refers to the substantial shift to online activities, resulting in dramatically accelerated growth for many software and internet businesses. So that's stellar. Long-short equity, what HMC would call hedge funds, 17% of UVIMCO's assets produced a 33%. Wow, so it's great for hedge funds as well. Great. Real assets, 10% yielded a 49% return. UVIMCO reports refers to hospitality and retail real estate and rebounding oil prices. Fixed income returns were negligible, 1.4%, and UVIMCO's credit portfolio involving financial restructurings realized a return of 29.9%. Now, it would be surprising if any of the very largest endowments, Harvard, Yale, Princeton, Stanford, performed at UVIMCO's level. And as explained below, Harvard may trail the top performers among its immediate peers. But as UVIMCO reveals, the recovery from the pandemic shaped historic returns for well-positioned, diversified long-term investors who have built portfolios orientated to the risks and rewards of owning equity. Yeah. Early reports for fiscal 21 suggest very robust investment gains for endowments and pension funds. What does this imply for Harvard Management Company's results? In investing in the university's endowment, by far the largest source of university revenue. The simple answer is, of course, that is too soon to tell. HMC will report its performance for the period since on its form. But the HMC team certainly was operating an environment unusually favorable to owners of financial assets, raising the prospect of higher returns last seen early in the millennium and during the recovery from the Great Recession. If so, that might produce a multi-billion-dollar increase in the endowment value, which has risen relatively slowly during the past decade, given volatile returns and the sums distributed, now about $2 billion annually to support academic operations. To give a bit of context. When the coronavirus pandemic spread around the world in early 2020, economies were shut down with unprecedented severity and speed, and financial markets declined precipitously. It's hard to remember that now, after equally unprecedented government outlays, record low interest rates, and the advent of vaccination led to swift, if still powerful, and eye-popping returns on investments. Even as owners of bonds endured negligible real returns with interest rates near zero, those investing in equities prospered mightily. For the year ended June 30, the S&P 500 was up 41%, and the NASDAQ 45%. All right, that's a bit of context. Down here, there was the crystal ball. That's interesting, right? If HMC's asset allocation were unchanged from mid-2020, it earned nothing overall on its cash, fixed income, and real assets. And one applied hypothetical investment returns of 20 to 30% to the equity holdings, it will be an easy back of the envelope calculation to come up with gains for the year of roughly 7 to 10 billion. Reduce those gains by funds distributed to pay Harvard's expenses, about 2 billion, and increase them by gifts from endowments. For endowment received perhaps $500 million. Wow, that's a lot. And the endowment's value at the end of the fiscal 21 approaches 48 to 51 billion. Unbelievable. Let's get this in the record. 51 billion. Were the outcome in that ballpark, there would be plenty of grist for reflection on the comparative prospects of those better and worse off when the pandemic laid bare some of the wide divisions in American society. Seen in another light, an endowment of about that size would finally, after 13 years, have gotten back to the real purchasing power in 2008, when the endowment totaled 36.9 billion. What? Seen in another light, an endowment of about that size would finally, after 13 years, have gotten back to the real purchasing power in 2008, when the endowment totaled 36.9 billion, just weeks before the markets collapsed and the Great Recession began. A long slog towards shoring up Harvard's finances for the future during a period of subpar HMC performance and protracted financial constraint. And there will surely be analyses, pro and con, of the restructured HMC's one-year performance versus peer endowments. The investment team rightly regards any single year as a period of time far too short to be meaningful for such assessment. HMC is aiming for superior performance over complete investment cycles up and down, and does so with Harvard's needs in mind, while aiming for perhaps less portfolio risk than some peers. More interesting will be the reaction of the corporation, which has held the financial reins tight, and even in the wake of the 9.6 billion Harvard campaign. Will the president and fellows be inclined to consolidate the hard-won gains, given the recent pandemic challenges and the university's growing dependence on endowment distributions to pay the bills? Or might they for once indulge in the academic equivalent of animal spirits, perhaps challenging especially loyal donors to match a one-time distribution to advance the highest priority school and university academic initiatives? That's interesting. So, another good paragraph, just get it all in. Such speculations are naturally far out in front of what can be known publicly now, but they make for far more pleasant summer reveries as professors and students return for in-person teaching and learning again than those that darkened the semester during just 1 year ago. Okay, yeah, very good. Harvard's financial reports is linked on there. So that's it, folks. Gosh, those are eye-popping returns, right? Well, let's see how it goes for the future. This is Greg Silverman. Come learn with me. Out.